Hello, traders, and welcome to the first ever episode of the Busy Traders Trading Room. So, the Busy Traders Trading Room is a program that we established to help traders get an insight on the markets, get an insight on the technical analysis aspect of the market, also understand our thought process when it comes to breaking down the charts. So, I created this program special for you to learn something from me, to get an insight on what's going on in the market, and also give you like a straight path or an easier way for you to actually take the trade. So don't take this as an investment. This is my advice. This is how I see the markets. So the decisions is all upon you to whether take a buy trade or to take a sell trade. That decision is still up to you. So I created this program to help you understand and navigate the markets easily and with a clear and conscious mind. So, without further ado, let's get right down to business. So, on the Busy Traders website, when you go to the Traders Hub menu, you can always find the News Hub. So, before you start your day, you need to know like what are the fundamentals that are coming out throughout the day. And once you understand like what the fundamentals are coming out throughout the day, that helps you and gives you like a clear insight on what to do and what you can actually see in the market and what you can actually do about it. So um, for today on Tuesday, we had some few news early on. We had during the Asian session, we had the People's Bank of China run prime rate. Um, I've never met a trader who actually trades the Chinese yuan, but the Chinese yuan, what actually happens on the Chinese yuan is it usually affects New Zealand dollar and Aussie dollar. The reason why is because Australia and New Zealand are one of the biggest importers of Chinese goods. So whatever happens to the Chinese yuan generally affects the Aussie as well. So because if the Chinese yuan is becoming more expensive to get, it means that the Australian dollar will technically fall because like they will have to pay more Australian dollars to actually get few Chinese yuan. I hope you get that point. Anyways, we also had the RBA meeting minutes, and also we have building permits for the month of May coming on later for the United States dollar. So with that, that's the fundamentals for the day. You can always go to the trading room menu. So once you go on the Traders Hub and go to the trading room, that's where you're going to find the latest episode of the trading room. This is where we will be posting that latest episode. So you can always have the trading room and also be able to use our lot size calculator so that you can be able to take trades without any fuss or any problem. So let's get straight into the technicals. From the previous breakdown that I did, that was yesterday. We did a live session. And we were able to take a trade on gold. I will give you an update on how that's developing. But apart from that, we did a breakdown on a few key pairs, and this is on my top trade watch list. My top trade watch list. We had Euro USD, GBP, JPY, Aussie Yen, Euro Yen, US 30, and Nasdaq. So those are my top trades throughout this week. And as you can see, it's not many pairs. I do not trade 10 pairs. Sometimes I even trade only one pair throughout the whole week. These are just setups that are ready. And USD isn't even my top trade. It's actually because the DXY and the USD have that inverse correlation. That's why I usually look at the USD, but it's not like I am actually trading USD. Most of the times I usually don't trade USD. I usually trade GBP, JPY, Aussie Yen, and Euro Yen. Those are my top trades. And sometimes gold. I don't have gold, and I wonder why I hadn't put gold on my top watch list. We were trading gold yesterday. Let me just adjust this. Yeah. I had gold yesterday, and God, my laptop is actually broken. So I just added it to my top post. Anyway, so back to my top trades watch list. I had gold, but I see like I think looking at the price right now, I think it already took me out on a break even. So I did close out some partial profits. I did close out some partial profit. So starting out with DXY. So the DXY, as you can see, price was ranging for the past few months. It has been ranging in between these two liquidity regions. We have the internal and the external regions of liquidity. So like I explained on the live session, the DXY, we don't trade the DXY, but we look at the DXY to get an insight on how the market is actually evolving or how the market is developing. That is what we use the DXY for. So we use the DXY to get an insight on how the dollar is shaping against other major currencies, because most of the pairs that we trade actually in the market are dollar related. And once you understand that most pairs are dollar related, looking at the DXY is important because it will give you an insight on whether the dollar is bullish or the dollar is bearish. So as you can see, overall, the DXY has been bearish and it has been pushing to the downside. What happened yesterday and on Friday was that the market tapped into our external liquidity region. As you can see here, it came up and picked up some liquidity, so pullback. Because naturally, that's how the market moves. It will always create impulses and correction. Impulses and correction. Impulses and correction. And as you can see here, impulse correction, impulse correction. A correction is counter to the trend. It's when the market is actually pulling back and giving like a breeze. It's getting like a breather before it actually continues in a certain direction. So as you can see here, we tapped into that external internal liquidity region, but 90% of the time the market will always go back and fill the liquidity region. So liquidity regions right here, as you can see, we had this huge liquidity region. So you might ask yourself, what is a liquidity region? A liquidity region is where orders are actually being placed or taken. So it's an area where you will see most orders being concentrated. You will see a lot of spikes around that area. You'll see a lot of changes in trend along that area. You'll see that the market taps into that area, then reverses in a certain direction. Or sometimes it might bounce from that area a couple times. So as you can see here, we can see like this whole region here, the market has had trouble breaking through. And liquidity gaps are these huge areas of space. Like it's always being like, it's not always covered with price action. It's just huge areas of space. And as you can see here on this low point, we had this huge area of liquidity gap. So 90% of the time, the market will always fill these liquidity gaps. It will always come down and fill those liquidity gaps before it actually continues in a certain direction. So at the moment, as you can see, price has been pushing to the downside, and I am expecting to complete this liquidity gap to come and fill this gap right here. So it can take days, it can take weeks, it can take months, it can take years to actually fill a gap. And at the moment, the DXY, it has taken, since May 2023, it hasn't reached these lows. So naturally, it can take another month or two to actually come back down all the way down there. It can take years as well. It's not a must for the market to complete a liquidity gap in a very short period of time, especially when you're looking at it on the higher time frames. So I'm expecting some continuation to the downside when it comes to the DXY. So I believe like it's gonna continue falling. It's gonna continue going to the downside. And that being said, we can expect some further bearish moves on the DXY. So that means when you break down charts like EUR/USD, you can expect bullish pairs to be bullish against the dollar. So at the moment, looking at the EUR/USD has that inverse correlation with with the DXY. It has that inverse correlation with the DXY. Hence, we can expect some further continuation to the upside. As you can see, when the DXY is pushing to the downside, the EUR/USD is going to be pushing to the upside, and so and vice versa is also true. So and vice versa is also true on that. So at the moment, I am expecting some further continuation to complete this liquidity gap as well. on the Euro USD, so we can come and fill this liquidity gap. So there is room for us to continue pushing to the upside. And for those who watched the live session or who were with me during the live session, we were expecting this. And since it was Monday, there wasn't much of a move in the market. So impulse correction, impulse. We're expecting that next impulsive leg to the upside. I already missed the entry on the bottom of the structure. I missed that entry. But as you can see, it has created like a nice flag there. I wouldn't take a buy trade right here because I have two types of entries. I have the risk entries and reduced risk entry. For this case, it's a reduced risk entry, and I usually don't prefer taking a reduced risk entry. The reason why is a reduced risk entry, I have to wait for the market to actually break the structure. But then, as you can see, it formed that first rejection there. It won't be a surprise if the market rejects here again, drops down, comes back down again, comes back down to the bottom of the structure, creating like a third touch. So 1, 2, 3, third touch. So my favorite setup would be, so if I were to take a trade on USD, this is where I would want to take it. I would want to take this trade on the bottom of this structure right here from the third touch, because that will confirm like the completion of this flag, and it will give you an even better entry area, and also give you a nicer risk reward ratio, giving you like a risk reward ratio of almost 14%, because you can enter from the bottom there and with a very tight stop loss of maybe 15 pips and look for it to the upside, look to see the price going to the upside. But that's not a must for the market to actually do that, because as you can see, it is forming something like a slight head and shoulder structure. If you measure these lows right here, if you measure these lows right here, you can say like it's something like a reversal. And as you can see, the momentum that the market is actually pushing to the upside is convincing like this can continue. So you can take a reduced risk entry, but then your stop loss needs to go below the previous low point. So it means it gives you like a 30 pip stop loss, and to your main target like 150 pips. So a risk reward ratio of almost like 4%. It's still a good trade, because like the risk reward ratio is what matters. It's still a good trade, but then like the risk factor, the stop loss needs to be wider if you take a reduced risk entry, because you will need to wait for that break. But then I wouldn't want to take this trade, because this is what can happen. The market can come and spike there, form like a mini double bottom, then come back down to our structure, then break to the upside. So it can happen, something like that can happen. And that is why I wouldn't want to take a reduced risk entry out, and I will just wait for the bigger trade from the bottom. If it doesn't come, then I wouldn't mind as well. So that's USD. There isn't a trade there for me personally, but for someone else, you can take the trade. Coming to GJ, which is my second favorite pair to trade. GJ, as I explained on the live session yesterday, it respected that live session analysis to the T. And as you can see, the market didn't manage to push to the downside. And now it has created that first touch. We had that second touch of the bottom and the third rejection. So it came and picked up some liquidity from the lows of 181. So from there, I am expecting price to continue pushing to the upside. But looking at how the market is shaping up right now, so I just started straight from I am looking for a push, a continuation, because GJ has been overall very much bullish. This whole year, GJ has been very, very bullish, and I have been trading GJ since January. Since January, I've been taking trades on GJ, though there were short-term sells, long-term buys. But long-term, we are looking to see GJ go all the way to the 2015 highs, which is also our liquidity level. region, we have this massive liquidity gap. And as you can see, um, this liquidity gap was started since August 2015. So it's been 8 years since the market has come into this liquidity. I have this level, first level of liquidity, which is an internal liquidity region, and I have the external, which is the top price. So it's been like 8 years since the market has reached that level, and as you can see, it's going. That's where the price is actually being pulled to, and that's how the market works. It always goes. It always goes to those similar prices. Like there's never going to be a time whereby like price um doesn't respect this. 80% of the time it will respect it. It might take a longer time to actually respect it, but it's always moving in that particular way. And that's when like you will always find like people talking about all-time highs or all-time lows. Those prices are always going to be formed. They're always going to be formed. And once the market reaches at a certain price point, after a longer, like after a certain period of time, it will always come back to those prices again, because that's how like things work here. There's this saying like in inflation, when price rises, people tend to get used to that price. So if, let's say for example, if an iPhone is sold for $1,000, people might panic like, why is the price so high, blah 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 blah. But then there's always going to be a person who's going to buy the same iPhone for that price, right? So when people start buying it at that price, people get used to that price, and it becomes a normality. And that also works in the market as well. So whenever we reach a certain point in price, even though we reject that price and we sell off, we go down, at a certain point in time, price will always come back to that same level. I hope you get the concept. So that's also the concept of liquidity region. Liquidity regions are where prices, where orders are actually taken from. It's going to be a place where orders are being taken from and taken to. So whenever like a market rejects a certain level and starts pushing to a certain direction, it's always going down to a certain price point, to a familiar price point. So whenever price, let's say whenever you are selling, there's always going to be a set target price. And this is why in trading, we have take profits, because we know like 80% of the time, the market will go to a certain price point. And that is why we set those take profits. So I hope you're getting the point now. And this is a concept that most traders don't know or usually try to ignore, but that's how the market works. So, looking at the price action right now, I missed my first entry. Similar to Euro USD, this is how I wanted to take the trade on GJ. So right from the key level, which was 180, 181. So as you can see, the market spiked just that T, and we could have set our. The good thing is I didn't send the signal, but then like I explained it on the live session, whereby we could have set a buy limit order on GJ from 181, and our stop was just slightly below there. And to our first target of liquidity, to our first internal liquidity region, gives you like 500 pips. So it's a very, very nice trade and a very potential trade to look out for. So at the moment, I will wait for another spike, maybe into 181.20, and look for a buy from there. So I will update you guys on the development of that trade. Another pair that I was looking at was Aussie Yen. So Aussie Yen, starting from the, let's start from the weekly time frame. So you can see clearly the concept of liquidity regions being filled. As you can see here, price came all the way and filled this gap. Like we had this gap, and it formed back in September 2022. And as you can see, we are in June 2023. The market came back up to that same level. So it's a concept that goes on and on and on and on in the market. And when you train yourself to understand how liquidity works and how this concept works, you'll never be surprised on how the market is going to move, or why the market is rejecting a certain price point and going to a certain price point. It's always because of those liquidity levels. But it was the mini dog. Okay. So it's always going to be like that. The market is always going to move like that. So looking from the weekly time frame, as you can see, the market came all the way to this liquidity region around 97.6. The market rejected, and now it's pushing to the downside. Looking from the daily time frame, we formed something like a double bottom, but then I am expecting price to actually reach the highest point and even maybe spike above a little bit and then continue down. So at the moment, I was looking for a potential buy trade from the lows here of 96.5. I was looking at a potential buy. So looking from the 1 hour time frame, but then looking from the 1 hour time frame, I was looking for this liquidity gap to be forming like a double bottom. But then looking at the structure right now, that can be invalidated, because if I just draw up like a trend line, sorry, if I draw up like a trend line from here to here, you can see clearly that the market did manage to break, came back and retested it, impulse, and now it's forming a correction. So naturally, the market can go all the way down to 94.60, or even go back down to retest this liquidity region on the lows right there, right? So if I draw up from the 15-minute time frame, I wouldn't take the trade right there. This is how I would want to take this trade. So we are forming like a continuation flag, right? So we've just created that first touch and second touch on the bottom, and also on the top we are forming this. So this is how I would take this trade. I would wait for a push back up like that. This is just to catch people on the wrong side, and then a drop, because we are forming something like an expanding flag formation. This would be my top setup. So it's not a valid trade for the market to go, but we always have, I always set my strategy is always broken into top trades and also high probability trades. The highest probability trade will be this one. Like, if this happens, no doubt the market will play out perfect. A valid setup is the one that the market breaks. There isn't like a completion of a pattern, but it plays out. So it's still a valid trade, but it plays out. And if this plays out, if the highest probability trade plays out, you're gonna get like a 224 pips, a risk reward ratio of almost 8%. But then it's still valid for the market to break. So if I just remove this, it's still valid for the market to break from here and your stop loss will just go slightly above structure like that. And so as you can see, the risk reward ratio actually drops to almost like half the risk reward ratio. So it's still valid. It's a valid trade, but then the highest probability trade is the ones that are always on top of the structure, and this is still a valid trade. So if this plays out, you can take the trade from here and look to sell all the way down and complete that, like complete the structure. So it's a very nice trade simply because of that impulse correction, that next impulsive leg to the downside. So that's Aussie yen. Hope you're gonna take it. Breaking down gold, I'm gonna skip euro yen because I don't want to make this video too long, and if it's too long, it's going to bore you. So gold. Yesterday we took a sell trade on gold. The reasons why was because we formed something like a head and shoulder structure right here. Price did manage to break. It went into profit. My first TP point was 1945. 1945, but as you can see, it just missed almost like 20 pips or so, like almost 20 pips away from hitting my take profit, but then like it spiked and reversed. And as you can see, it formed like an inverse head and shoulder structure. And it came back and took me out on a break even. So no fuss, no problem. That's how the market works. Sometimes it's that ugly, but then we always have to be able to trade the market ugly. It's not always going to be picture perfect. It's not always going to go straight into take profit. This trade actually went into profit, but then it didn't hit my take profit. So it moved slightly above. So I did manage to close some partial profits. And I do hope some people were able to do that so as well, because sometimes it's not always going to be sunshine and rainbows. It's always going to be how you manage the trade and how you're going to separate. But still, I believe like it's still a sell trade. The sell trade is still valid on gold. So it's just a minor pushback, because now you can see the structure that is formed. We've created that first touch, second touch, third touch, and now it even increases the chances of this playing out to the downside. So I'm probably going to re-enter this trade. I'm gonna re-enter this trade. So I will re-enter this trade with the same targets and take profits that I faced yesterday. And so we're in. So I entered my sell trade on gold. So the reasons why is because I still believe like this is going to fill this liquidity gap right there, and we're going to sell off again. So I expect it to go all the way to this low point here to fill that, and maybe from there we can look for buys. So longer term, I am looking at the target down below there, but short term we can look at the first TP point at 1945. You can even set it to the slow point right there. Your first TP point can be right here. Second TP point can be at 1935, and the third at 1925. So almost like 300 pips on gold. So that's gold for you guys. I'll just finish up with VIX75 because I saw people actually talking about this in the group. I will finish this market breakdown with VIX75. So VIX75, let's start from the daily. So starting out from the daily time frame, VIX75, I'm pretty much looking for a potential sell trade. We were looking at this structure right here from the daily time frame. If I just zoom in, there was this structure, like a flag type of formation. We also had this internal and external liquidity right here. This is our external liquidity region and our external liquidity region. But then we also had that rejection from that top of the structure. We saw that rejection, impulse, correction, impulse, and then the market started to form a bigger type of correction. So at the moment we created that first touch, second touch, and the third touch of the structure. So that gave me a very good signal that this is going to sell off. I was looking at this since last week. I didn't actually trade it. I traded it. I think it was on Monday. I traded a buy trade from it was 358,000. I took the buy trade all the way to the top, but I missed the entry to take the sell trade. So we were looking for that first touch, second touch, third touch, and now we are selling off. So this is what can happen. This is what I expect. So we have this internal low point here. So the market can come down to this low point and come back up again and form, as you can see here, left shoulder, right shoulder, whereby it can then come back and complete that third touch on the bottom of the structure. Boom, right, like that. And if it breaks, this is where it gets fun. If it breaks, if it manages to break, You know how we trade head and shoulders, the rules that I trade head and shoulders. Um, where is that price range? So if you measure from the head to the neckline, and if the market manages to break that, look where it goes. It goes exactly to the 90% rule area. You see the same measurement. So it's not like I have a crystal ball, but that's how the market works. That's how the market works. We know, like, if the market manages to break 90% of the if it managed to break a flag 90% of the time, or like an ascending structure or descending structure, 90% of the time it will go back to the beginning of that structure. And where is the beginning of that structure? Right here. Just a slightly lower than that, but then it completes the whole structure. So this is my focus on VIX75, but it's not a must for the market to come back and form like a head and shoulder structure. If you go on the 4 hour, on the 4 hour time frame, you can see clearly that we had that nice impulse, correction, impulse. The market corrected for some time, so it can go all the way down and break if it forms the flag and continue going further to the downside. It won't be a surprise at all. It won't be a must for the market to go to complete, like, to continue to come back up again. It's not a must for it to do that. So it can easily just continue and break from there. So if you look from the 15-minute time frame, 15-minute time frame, we might have a short-term sell, but I wouldn't want to take a sell trade because we have like this. It can just come down and form like a double bottom and then reverse, because the risk reward ratio isn't big as much. So it can just come down here, reject, then come back to the upside, form that head and shoulder structure, and then reverse. So for the moment, short term we might have that sell, or long term we can go back to the upside. But I am betting on the buy to go and form like that head and shoulder before it actually sells off. I am betting on that. I believe like that's more likely, because as you can see, we had that nice rejection. So the market can just pick up some liquidity again and then reverse back to the upside, form like that head and shoulder. Then that will be the highest probability trade. So yeah, that's VIX75 to you guys. Anyways, guys, I do hope you enjoyed this episode. It took a very long time to record. And for any suggestions, any comments, be sure to send me a message on my Instagram at IAM_McPorter, or you can always visit our page at the Busy Traders Pro. And also we have a free Telegram channel. I will always leave a link in the description for you to get straight access to that. Anyways, hope you enjoyed that one. Trade safely, be smart about it. May the pips be with you guys, and I'll catch you all on the next one. I will release also a list of how our programs are, because on Tuesday we have the trading room early on the day, and later on we have the Traders Talk podcast. So in the coming few days, I'll be interviewing very famous traders, very top traders, who are going to be able to like give us an insight on how their journey is, and you can be able to learn from them. So thank you very much for tuning in. I hope you enjoyed this market breakdown, and I'll catch you all on the next one. Cheers, happy trading, and bye bye.